This is an Uncovered Japan Company research report on Shikino High-Tech, ticker 6614. Shikino tests chips, designs analog circuits, and builds industrial cameras. It is a small specialist with real engineering niches, but it is also working through an earnings downturn and a demanding turnaround. The starting valuation needs care. The shares were at 852 yen in the report's June 2026 market data context, or 45.6 times forward earnings. That looks expensive, but it is calculated on a depressed recovery year EPS after a loss. Price to book was 1.63 times, so the market appears to be pricing a recovery, rather than proven normalized earnings. Shikino's product map has three parts. Electronic Systems provides burn-in boards and measurement equipment that helps screen semiconductor defects. Microelectronics designs analog and digital LSI and licenses IP cores. Product development makes industrial cameras and imaging systems. This mix gives the company multiple paths into electronics markets, but the segments have very different economics. The financial reversal is the central fact. Revenue peaked at 7.1 billion yen in FY24, and then slipped to 6.5 billion in FY26. Operating profit swung from a 657 million yen peak in FY23 to a 169 million yen loss. The report attributes the severity of that reversal to a high break-even cost structure and a sharp drop in automotive chip-related orders. The segment picture explains why the recovery is difficult. Electronic Systems was the largest segment at 47% of sales, but it lost money. Product development also remained loss-making. Microelectronics, at 1/3 of sales, was the only profitable segment. That makes the analog design business the current ballast, while management works to repair the other two legs. Shikino's strongest advantage is analog design, where skilled engineering remains difficult to automate and difficult for customers to staff internally. It also has know-how in burn-in temperature control and a library of 60 IP cores. These are tangible assets. But the moat is narrow. It is strongest in one segment, and the company remains tiny beside larger test equipment competitors. Customer relationships support technical credibility, but they also create concentration. Sony Semiconductor Solutions, Denso, and Renesas together represented about 28% of sales in FY 2025. More importantly, roughly half of revenue was tied to automotive markets. That exposure is why the automotive semiconductor inventory correction had such an outsized effect on results. The balance sheet and return picture has deteriorated with earnings. Return on equity exceeded 20% through fiscal year 2024, but was minus 4.6% in fiscal year 2026. The equity ratio was 39.7%. The report sees remaining financial slack, but also emphasizes that another weak cash flow year would increase pressure on a balance sheet already carrying short-term borrowing. Management strategy is to diversify beyond automotive, increase non-automotive instruments, build overseas channels, and monetize the IP portfolio and new products. The macro backdrop is supportive. Japanese semiconductor reshoring, AI and data center demand, and a growing need for testing and power electronics. Yet the report is clear that these levers are early stage, not results already in the numbers. The midterm plan points from roughly 6.5 billion yen of FY26 revenue toward 8.5 billion yen by FY 2028, and a longer-term 10 billion yen plus vision by 2030. Reaching that target requires both higher revenue and better conversion into profit. The milestones worth watching are the automotive cycle, new non-auto orders, overseas revenue, and evidence that the loss-making segments can improve. The report's FY 2029 scenario framework makes the uncertainty explicit. Its bear case is 600 yen, its base case is 1,150 yen, and its bull case is 1,800 yen, against the 852 yen reference price. These are the author's assumptions, not price targets. The dispersion reflects the same core question. Can the automotive cycle recover, while Shikino delivers its margin repair and diversification plan? Shikino High-Tech has a credible niche in analog design and chip testing, as well as meaningful macro tailwinds. But its loss-making segments, automotive dependence, high fixed costs, and unproven execution keep the risk high. The most useful signals are simple: a return to positive operating cash flow, an improving automotive order cycle, early overseas contribution, and evidence that the recovery plan is landing. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security.